Hey guys, I get a lot of questions about what I think is going to happen in the housing market in 2022. So I want to do a little forecast, look at some graphs and data. If you don't like graphs and data, please just stop watching this video right now. All right. So there's three major areas I want to focus on today. We're going to look at historical data of interest rates, inventory, and overall economical strength. So the first graph we're going to look at are 30-year fixed mortgage rates. As you can see by this graph, you probably already know mortgages are as low as they've been pretty much forever. Even if they go up a little bit, which is expected and is healthy, we still see that it's likely going to be similar to what we've seen the last 5 years. Even since 2010, we really haven't had much above 5%. So I think it's going to continue to be really great rates into 2022. And this is definitely something that's only helping the housing market right now. I do get some people who say, hey, I really want to buy before interest rates go up next year. I really don't think it's too much of a worry. If you find a great property now, fantastic. But typically, as rates, we know now, as they go down, prices start to go up and up and up because you have more buying power and you have lower monthly payment. So I think a little bit of increase will actually stable off kind of the crazy prices we've seen and just make it a real healthy balance. What it'll also give with higher rates is the ability to bring them back down if we do hit a COVID 2.0 or some kind of economic issue. The government can just drop them down, stimulate economic growth, and yeah, just make it cheaper to borrow money. Who doesn't love that? Okay, next is inventory. Now for inventory, all we really know is what's on now. It's hard to tell exactly how much is coming in the future, but one thing we can look at is what's currently being built. So this is newly private owned housing by permit. So this is newly built inventory. And we see it always ebb and flows. Two probably high points right here in the mid 70s and then here right before the housing crisis in 08. We see that fell fast. And it's important to know this alone isn't going to sink the housing market. Usually multiple different things all coming together at once in a perfect storm. You look where we are today, we're actually trending in the last year or so slightly downwards, which is actually a good thing for the market. It's actually strengthening the market having less inventory. Actually, it might be nice for buyers to see this hopefully increase. But right now, even this point right here really isn't anywhere close to where we were. And again, I don't think that would be a factor alone to sink the housing market. Overall, where we are right here in this number, I think this is a really healthy graph, a really healthy point we are with building inventory in the US. Okay, so the next thing we're gonna take a look at are unemployment levels, which we know fell off a little bit during COVID, but looks like they're making a rebound. So our first graph here is employment level. We see since 1950, it's been climbing at a really healthy rate. The biggest drop off probably since 1950 is right here, 2020, March, bam. A lot of people were saying this has put us back 10 years, maybe even more, but what we also see is since 1950, this is one of the quickest upticks in just jobs coming back, and things are still moving in a really healthy direction when it comes to employment. All right, last graph, last one. This one's showing us what type of buyers are taking out mortgages right now by their credit score. So this last graph is mortgages taken out by credit score, right? So mortgages since 2003. Now, if we look right before 08, the housing crash, there was a lot in this dark blue area, which is under 620, not great credit scores. A lot of those given out for a long time. Look where we are today. All this has shifted into the light blue. So we have in the last year or two, some of the strongest buyers we've ever seen, more than ever in the market. So a majority of people buying right now are over 760, which is just crazy. We're seeing some of the strongest financial buyers in the market, which means that even if you did have really any kind of shift, you're not going to see it turn into foreclosures and things like that. You're just going to see people sit on real estate. Hey guys, so overall takeaway for 2022 market, after looking at not just these couple graphs, but about 20 to 25, everything I looked at gave me a positive sense, more so than even the middle or negative side. So I think we're gonna have a great market, things moving steadily upward into 2022, but at a more healthy rate than we've seen in the past. So I think it's probably gonna be a good thing for everyone in the long run. Yeah, thank you guys for watching, and if you have any questions, feel free to reach out.